Okay, traders, welcome back to this video. What I'd like to do here is show you the all-new multi-timeframe VWAP indicator located inside of the TickBlaze trading platform. Now, this is not a community script. This is actually a default indicator inside of the TickBlaze platform. And so what you can do to find this indicator is you can just right-click. You can go into the indicator section, you go down to volume, and you can apply the VWAP onto your chart. You could also right click into the indicator section here, go to add edit settings, and then just go in here and type VWAP, right? Type V a couple times, volume, weighted average price, right there. And that will be the tool. You could do that as well, okay? Now, this video is really exciting for me because VWAP is actually a very commonly used form of analysis. It's a tool that is basically used by institutions to determine how to buy or sell big books of business. VWAP is used as a benchmark of value. So if you're trading above VWAP, you're said to be somewhat of a bullish state. If you're trading below the VWAP, you're said to be in a bearish state. And a lot of traders will trade VWAP with different forms of strategies. A common way of trading VWAP would be to, buy the VWAP on a test for a trend trade or sell it on a retest for a trend trade to the short side. A lot of traders will use the standard deviation bands, which are the outer levels for reversal points. And let me just kind of show you what that looks like. I'm just going to use the daily VWAP for a second. We're going to get in here. And this is the overnight session, so this is where it kind of had very low volatility. I'm looking at the S&P futures contract on a 5-minute chart, and you can see the market. It'll get to the outer band, and then it'll trade itself back into the mean, and then it'll show as resistance. And then once we get above it, it comes back down for retest, etc., and then it holds as support. And then you can see the market gets a little bit of resistance. But really, let's take a look at more of an active trading session, right? Let's go down here off the U.S. Open, and you can see here that come 9:30. The market, does its thing off the open. It pushes down, it comes up, hits VWAP, acts as resistance. Some traders will most likely try to short this. If we got above it, they would try to buy this, right? This is just standard VWAP trading 101, okay? And yeah, that might be good. And, this is kind of what everybody and their dog is doing, right? But what I'd like to do today is teach you a little bit of a different approach that I, see very few people understanding. And, rather than always just trading the trends off the VWAP or trying to fade their reversals, I believe there's far better strategies using VWAP, and that's what we're going to do today is we're going to show them to you. Now, the other thing too is that what a lot of people don't realize is that most platforms only allow you to look at VWAP on a session basis, meaning the daily VWAP, right? They're going to give you the VWAP that starts at the beginning of the session, and then basically it trades to the close of the next session. Well, that's great for round one, but what we've done is we've actually added two other levels to the VWAP. We have the ability to look at weekly as well as monthly, and these can be incredible trading opportunities for you to understand once you see the power of this. Now you got to remember, like daily traders are trading intraday. Weekly and monthly, these are bigger players paying attention to this. And there's some really, really big decisions being made on weekly and monthly VWAP locations, especially for institutions. Daily is, it's the daily benchmark for the prop traders and firms doing business intraday. But if you're a big bank or if you're a big player, you're looking at major macro levels. Now, how can that benefit us as a day trader? Well, I'm going to show you some specific strategies that can be used. And I think once you see how basically easy this can be, you're going to take well to it. I can promise you that. Now, in order to change the settings, you can just double click inside the VWAP indicator. And all you need to do is change the colors of the bands. You can change however you see fit. And then if you come into the parameters section, you can literally just choose daily, weekly, or monthly. And you can choose whether you want to see the bands or not. You can see if you want to show 1 standard deviation, 2 standard deviation, 3. This is the standard setting. And we have them set to the default. Now, I've already pre-configured this on 3 different charts, and we're going to look at the strategies. So let's first talk about using the daily VWAP. Okay, then we'll go into the monthly, and then we'll go into the weekly. Okay. So everybody and their dog is going to open their charts and they're going to come in the morning, maybe have a coffee at 6 a.m. or 7 a.m., right? And they're going to look at the VWAP and they're going to say, okay, where's the VWAP? Okay, where's the outer bands? And that's basic. That's what, there's nothing wrong with that. It's just, there's other ways to assess the market. Now, the way that technical traders view the market outside of real-time analysis is they go back to look at historical information. So if I'm sitting here in the morning off the open, and the VWAP for the current day, okay, is called dynamic. It's moving, which means these VWAPs are always moving. You don't know if they're going to hold. You don't know if they're going to give you a good trend trade or if the reversal is going to work. It's very similar to intraday volume profiles. You don't know if the volume is going to give you a level. But what most people don't realize is that yesterday's VWAP is fixed. The day before that is fixed. And to this day, I very rarely see traders paying any attention to this data, and I don't understand why. And I hope that after watching this video, you will be able to see the power of what I'm about to share with you. Let's go into the overnight session here, and let's just stop right there. Okay, now this VWAP is fixed, which means after the close, these levels, this VWAP will not change. This 1, 2, and 3 standard deviation, 1, 2, and 3 standard deviation is not moving. Mathematically, it's fixed. The volume data is now fixed, and therefore these become static levels. And why is this so powerful? Well, because these become amazing opportunities to trade them. And I'm going to basically hit these. I'm going to draw some lines on the chart. We're going to just draw some lines. Boom, boom, boom. Let's just make this a little bit easier. I'm going to draw them here. Now remember, this is done on the daily VWAP first. We're going to go do this on the weekly and the monthly after, okay? And then we're going to just draw this. We're going to draw this, okay? Now the market opened here. Okay, let's watch what happens. The market hits that static level in the overnight session. What do? We get a decent bounce off of it, okay? Let's watch as the market trades through, okay? Let's just watch as it trades through, and this level's now been played. We're not gonna touch it. Let's wait and see what happens after the market goes up to these next levels. Watch what happens when the market gets to the prior day's VWAP. This was the prior day's VWAP, okay? So the market opened, traded down. This is the market open here. It traded down, pushed all the way up, and it tested yesterday's VWAP on that trading day. Most traders aren't even paying attention to what that is. They don't even realize that that's what the market was doing. It was going to yesterday's volume weighted average price. It came all the way up, traded up here. And if the market gets through a level, this is going to become strong support. So you can see that there was really, really great trading opportunities here on the first session. I don't normally like to trade the level if it's been tested several times. That's why it pushes through it and it pushes through it. Never did get down to the second level, but it gave a really, really great trade on the prior day's VWAP. Okay, now let's go do that one more time over here. I'm going to change all the drawings. Let's remove all the drawings. Let's just go back to the prior day. Okay, let's just go this day. You can see the movement. Now let's just go draw some lines here. Okay, let's go in and let's just draw them here. 1, 2, 3. There's the VWAP from the prior day. 1 standard deviation, 2 standard deviation, 3 standard deviations. Okay, so let's just go and watch this. Look what happened right off the open. Right off the open of the overnight session, they immediately test the first standard deviation. Mathematically, there's a lot of statistics that show these levels can be very powerful. Watch what happens. Trades up. You know, there was a great trade there. Let's continue. It broke through the level. So you can wait. You could put a level here. You could buy these or you could sell these with limit orders, or you could look for confirmation on a smaller time frame. You can wait for an entry pattern. Like there's many ways to time your entries. And then when it comes back down to test that, right? Take a look at this. It came right back up, tested it as resistance, traded right back down. But look what happened on the retest. Broken resistance. Support here, didn't touch it, came back down to touch it. That was really great support. This acted as resistance. Traded through it a little bit, but came back down, retested it back down. These are key levels that most traders are not even paying any attention to. And then watch what happens. It came all the way through. didn't hold on this one, but it held on this one. And this is why I always tell traders to don't just put blind orders there. Like, you don't have to fade these levels and then if the market blows through, you're getting stopped out. I always look to see how the market responds off these. Go down to a 1 minute time frame. Watch for the closing patterns on these charts, right? Most people are not going to be trading in the overnight session where it's very quiet. But if these are static levels, the market went down to test the second standard deviation from the prior day's infrastructure. And you would never know this because in the current day, the VWAP would be moving. So if you're trying to fade the outer bands on the current day VWAP and the market just keeps ripping, you could be trying to catch a falling knife. And so what I would be doing is I'd be going inside of the data on this level. And as soon as the market broke to new highs off that level, you can see that that's where the floor was. That's a great trade. That's an amazing trade, right? And every time you get to these levels, when you get to the point, you know, it seems same here. If this came down here and you basically came down and touched that level, you don't have to fade it. Just trade it on the first break as it breaks through, and then there's an amazing trade, right? Same thing here, trade on the first break, amazing trade. So my suggestion here is that you stop doing what everybody else is doing, okay? And you pay attention to this, because I've been trading for 15 years and I don't see a lot of traders talking about this. So take this as kind of one of those, I hope you're watching the video and you're taking value from this. Leave a comment if you think it's worthy. Let's go one more time and take a look at the daily VWAP. And I really want to just pay attention to these levels for a second. Let's draw them here. 1, 2, that's the prior day's first standard deviation. And there's the VWAP, there's the 1, 2, and 3. So remember, if we're looking at it from this, the session opened, the overnight session opened right here, Globex open, gapped up, boom, hit the level, okay? Static level, remember? And just sat there. Resistance held on that. Now, you're not most likely going to be trading this time. That's probably one of the worst times you could ever be trading this market. But as the market gets through it, it came back down to test it. Take a look here. If you were to trade this in the Tokyo Open, in the opening session, in the overnight, look what happened. Price came down, tested the support level. There's the first candle to break through the highs. That's a very, very tight stop for a very, very big trade. And this is literally just looking at static VWAP levels from the prior day's auction. Now we're going to watch as the market goes all the way up to test. Did it test it? Blew through it. Okay. Didn't get an opportunity to trade this to the short side. There wasn't an entry pattern, but there was here again, right here on the open. There was an opening break right here. And this is what I'm telling you. This has the power. Take a look up here. The market came back up, retested it, and took off. And then it came all the way up to that standard deviation level and then rallied back down. And take a look. It took it all the way back down to the prior day's outside deviations. So take a look at this. Right there. Huge opportunities to trade levels, and you don't need to be worrying about what the current day VWAP is doing because it came right back down. You had no reason to enter a trade until it broke through and gave you the entry pattern here. There's no entry pattern here, no trade. Entry pattern here, took out the highs, stopped below the lows, bango. Great mean reversion trade. Now, where this gets really fun, okay, this is on the daily. You can do this at the beginning of every morning session. You just go back and literally it takes 2 minutes to plot the prior day's auction levels, okay? And you can do that at the beginning of every trading day. So if you're a day trader, you can do that. But what you really get to do at the end of every week and at the end of every month is you get to put what we call macro levels. And this is where it gets really fun. Let's do the weekly. Okay, let's go down here and let's take a look at the weekly levels. Every single week, you have a bigger VWAP. That VWAP is going to trade every single week and every single month. And once you realize that, you know, like right now, I'll explain this. Today is Sunday. I'm filming this on a Sunday for the purpose of, having time and just really kind of going over this concept. But let's take a look at this concept. Right now, if we're going into next week at 6 o'clock tonight Eastern Standard Time, the market's going to open. What I can do every single Sunday night, prepping for the next trading week, is I can go in here and I can basically map out, there was the VWAP, 1, 2, and 3 standard deviations, 1, 2, and 3 standard deviations from the prior week's auction. I can promise you this, that the market is going to react to those levels going into the next session. That is a mathematical fact. And to prove that, I'm going to go back and show you. Let's just go back and delete the drawings here. We're going to go back and do this on the prior week's auctions. Okay, we're going to go back. Let's just go back to find a couple more weeks. Let's just go add some more time here. Let's go back in 2 months of data. Okay, let's just go back and find some weeks. Okay, and let's do that. Let's just go back and just pick a random week. It doesn't matter which week we pick. Let's go here. So let's just say we're trading into this session right here. Okay, and there was the market gap down, big gap. Okay, let's do one without a big gap. There's a, right here, there's a, let's just go find any week. It doesn't matter which one we do right here. Let's go back and do the one with the gap, and we'll just do it week over week and you can see it. So take a look at this. 1, 2, 3. There's the VWAP. 1, 2, 3. Okay. So the market gap down, heavy gap, big gap. It's interesting though where it gapped to. It gapped to the 3rd standard deviation and stopped. Okay. Now I'm not saying that there's some crystal ball or you need to have that, you need to figure that out, but it doesn't matter, because if the market gapped on the open, it's going to do what it's going to do. And then what happens as the market trades through these levels, take a look at how it responds to those levels. If it breaks through, it accesses support on the other side. But take a look at this. It came right up, hit that resistance. There was a trade right there on the break. Break to the lows. Very big trade. Right? Like that's almost 30 points. Okay, let's continue on. Breaks back up. Here, came back down to test it. Overshot it a bit. And then closed up here. It gapped all the way up to this standard deviation band and then dropped right down to the tick. Okay, then when it came back down to test this level, it tested it and then it built its position. And then ultimately what's unique about this is that this level lined up with the current week's VWAP. So the current week's VWAP at that time was basically sitting on a standard deviation level from the prior auction. And look how it held that level. You had prior levels lining up with the current week's auction. And let's just keep those levels on the chart, because remember, this is from an entire week, so the market's going to stay there. And watch as the market trades through them. Came up, overshot it, acted as support, came all the way up to test. Look at this. It came all the way up to test this next level, and it came right up. Here's the breakdown. Enter short. You could have entered short here too. I mean, that's within one tick of the level, and there's a big trade, and then there's another big trade, right? I mean, this is not some magic. It's, you drew those levels on a Sunday night, and when the market gets there, you watch how the market responds. Okay, came right back down to test that level again. Take a look as it gets to these levels, and then the week is done. So let's just do it again. Let's just do it again on the next week. Remove all drawings. Let's go here, remove all drawings. And let's take a look at the next week over. So that was that week. Remember, you can do this on a daily basis. You can do this on a monthly basis. We're going to do the monthly next. It's pretty radical. Absolutely radical. Let's go and draw some lines. There's the VWAP, prior week's VWAP. There's 1, 2, and 3 standard deviations. 1, 2, and 3 standard deviations from the prior week. Okay, so let's just go in and zoom in now, and let's watch the market as it plays out into this. Okay, let's continue down. Let's continue down. Overnight trading, quiet, very quiet sessions. And then it just trades very quiet through the overnight, and then boom, hits the level. Okay, now watch this for a second. Okay, came up, pushed through, traded through, came through, it just stuck there. It just stayed on this level, and then it dropped back down. Okay, now you can wait, you could trade a break to the lows or the highs, or you could wait for a candle close. Some traders will wait for a candle close at the level down. So like, let's say we're coming here and we're trying to short this, okay? A lot of traders will wait for the first candle close lower, which was this candle right here, this white bar. You get to push up. There was no lower low, lower close. There was a lower low, lower close here, which creates a level of supply, right? Rally base drop. They retested it and dropped. So you don't have to just take the first lower low. You can take a close and then retest it, right? Very, very, very good way of trading the entry patterns. Now let's keep going because that's just one example. There it is again. Here's a great example of an order block off this example. Lower low, lower close. Right here, 2-bar pattern. There's an up bar, down bar shift. There's the order block. Come in, hit it, drop. It's a big trade. But remember, these levels are there from the prior week. Let's continue on. Let's continue on. This level's been played so many times, I wouldn't, get used to it. Take a look at this. Came right down to this area. Boom, big flush. Now that was a news candle, I believe, at 8:30. But what did it do? It stopped right on that mathematical standard deviation. Overshot it a little bit, okay? Overshot it a little bit. But take a look at what happened. We waited for a higher high and a higher close as it came over. The first higher high and higher close. Write that down. You want higher highs and higher closes for longs, and you want lower lows and lower closes for shorts. The first higher close was right here, and the higher high. So if you're really... We're going to teach some entry patterns around this. We're going to do some strategy training on this. But if I'm looking at it like this and I overshot that level, I know that's an area of interest. I'm going to wait for the higher high and the higher close. And I'm going to draw my zone around that right there. Boom, boom, boom. I'm going to draw my zone around that. And that's the demand zone for the entry. Look at that retest. Boom. Came right back in. And wow, what a trade. Okay. So let's just keep going on. This is a VWAP lesson, not an entry pattern lesson, but I'm teaching you some little golden nuggets here and there. And look what happens. We get right back up to that VWAP level. Can't fake it. Can't deny what you're seeing. Can't deny what you're seeing. And then take a look. The first lower low, lower close that had any merit was right here. This was the lower low, lower close. Yeah, sure, we had some lower lows and we had a lower low, but didn't close lower. And this was the lower low, lower close. And all that did was create a level of supply from the high to the low of that. And wow, what a trade. Now that was the overnight session, so you're most likely not trading that if you're in the Eastern time zone. But if you're in the overnight, you cannot deny that. That is a banger trade. Okay, now let's continue on, and it took off to the upside. But look what happened when it traded through that level and it actually cleared it. So once it cleared resistance, it had a hard time clearing resistance this whole time. But once it really cleared it, what did it do here? Right back down to test that level as support, like to the tick. And these are prior week's VWAP levels. Remember, these are from the prior week's levels. Mathematically, there's a science to this, and I don't know the answer. I'm not going to pretend to you that I do. But let's take a look at what happened. First higher high, higher close, right off the level, was this candle right here, which means you had an order block zone right here. They came in to fill that order, boom, to the upside. So there's some really, really strong merit to what I'm sharing with you today. And I will hope you can take this and just go back and take a look at the levels on your own. You can see it here. It overshot that level, but I bet you if you go down in price in here, you're going to see the reaction and the timing of those entries. Now we're going to go and we're going to do it on a monthly. Okay. We're going to do this on a monthly, and you do this at the end of every month. So the weekly, you do it every Sunday night. At the end of every month, you do it at the end of every month, right? Let's continue down here. Let's do that. Let's bring up the monthly. Okay, like this. And yeah, so we literally just had the weekend. So We're moving into the first trading day tomorrow. At the time of me filming this, we're going into the first trading day in March. Well, guess what? These are the levels. They're right here. You can see it. So what I'd be doing today, and it's interesting that the weekly and the monthly are aligning today, but level, 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 and level. And every time I get to those levels, I would be paying attention to the entry patterns. Now, because we have an entire month of trading in here, let's go in and take a look at the prior month's environment, right? Because that's what we're here to do. We'll show you how to do static level placement using VWAP. Let's go in. Let's just draw the lines. 1, 2, 3. There's the prior month's VWAP, excuse me. And there and there. So if we're coming in from the prior month and we were looking at February and the market gap down, okay? Market gap down, no problem, big gap. Traded in between that area and then eventually it got to a level of interest, okay? Broke through it, came back down to test it as support, came back down to test it a second time as support, okay? And if you pay attention to what I'm teaching you about higher highs and higher closes, okay, this was the first right here. Broke above, tested it, higher high, higher close right here. So there's a demand zone right there that the market traded into right here and then ripped to the upside. So we're going to get into entries and strategies on timing the entries in a different strategy class, but let's just watch the levels. Oh, there it is. Came back down to test it. Oh my God, you can see it. I'm just going to draw it so you can see this here. A second here. There you go. There you go, just like that. And I'm going to just do this so you can see it. First candle to make a higher high, higher close forms the demand or forms the imbalance. There's the higher high, higher close, which means I can take the last order block, last down candle, and there it was. There was the test. They came back in. They dove down a little bit, get a little bit more orders inside that zone. But yeah, that was the big trade. Can't deny that. Can't deny that level. I don't care what anybody says. This is the easiest way to use VWAP from prior auctions. Okay, you're not worrying about the current VWAP. You're worrying about the prior VWAP. Let's take a look. Take a look. Price came up, tested that level right here. Now this is a pretty quiet time to be trading, right? You can see the price action is quite choppy, right? But if you are trading in the overnight session, you can look to time those levels. There was a trade here. If you look at scalping these trades, you can see that there was a lower low, lower close, which formed the demand zone or the supply zone right there. Can't deny it, came in, push off that level. There's resistance there with supply, right? Then the market came through, pushed up. This one actually failed to the downside if you took another entry here. And but it did break through and there was demand here. So if you think about this, and I'll just kind of go through another scenario here. Came in, pushed up, came down to support. This was the highest high with the higher close. This is all consolidation, which means there was a demand zone here. They came back down to test that support. That trade was done right here. That's why the second time when it came back down to test the level, it failed. Failed here because it already ate the demand up when it tested support. And so the point isn't about demand or supply or all this stuff. It's about the levels. This black level was plotted here from the prior month. And there's a reason the market's just respecting it, staying there. Let's continue on. Let's watch and see what happens in these levels. There it is. Touch again. Came back to test it. Test it again. Oh, wow. You can just see it. Came all the way back up. Let's see if it trades all the way to the next level. I don't know if it did or not. And then it came back down to test that level again, came back down to test that level again, and we finished for the month. Now, you are going to want to go and play with this. I can promise you this. Why? Because I've probably exposed your brain to something new that's exciting. It is exciting. Most people don't understand what VWAP is doing. It's looking at volume weighted average price but then what it's doing is it's applying a mathematical calculation around standard deviations. Now, I majored in statistics and corporate finance, so this is a background for me. So when I look at understanding how the market moves, it's cyclical, it's rotational, there's mathematics behind it, there's sequencing behind it, and VWAP is one of the most commonly used tools in the business. However, most people are looking at it in the current form, and they're not relying on static levels from prior auctions or prior weeks or months to be able to form their analysis. So what I want you to do is I want you to go into the platform and install this indicator. Okay, it's already installed, but just load it on your chart. If you're a day trader or a scalper, take the daily VWAP and do that every single day. Take the prior day's auction. If you're looking for major levels of reversals and to play those areas of interest, do it on the weekly and the monthly. I would do it every single week and every single month. Have those levels on your chart every single week and month going into the trading day. You will be surprised as you see the market respond to those, and you won't be guessing anymore. You can be like, well, we're coming back to a static level of VWAP. I can almost promise you that you're going to see the reactions that you're anticipating, and it's going to help you become more prepared in the market. Okay. I hope you enjoyed this training session on multi-timeframe VWAP analysis. We'll do some more training on this in the future. But for now, if you want to get social with us, give us a thumbs up, subscribe to the channel. If you like this video, share it. I'd love to be able to help more people. And yeah, we'd love to see you post some screenshots of your trades or some of your analysis using this concept. Take care, traders, and happy VWAP trading.